Hey everybody, good afternoon. Today is Wednesday, the 18th of December, and of course we have the Federal Reserve coming up here. What I'm not going to do is talk about what I think is going to happen to the market based on the Federal Reserve or what I think they're going to do. That is up to the market to decide. What we're going to talk about instead is where we are in this market and how we can hopefully make some ideas of where to the right places to be and how to make some money with it. So let's start with the S&P 500, and then we're going to go through some of the major stocks. And then, as I put on Twitter, we'll do some requests here as well to take a look at some stocks that you guys are interested in. So S&P 500 is holding above that round number of 600. It's holding above that orange anchor from the election and above that rising 20-day moving average. So this on that's the daily time frame on the right, on the left. On the right, we have a 30-minute time frame. Each one of these bars represents 30 minutes of trading. What I've pointed out here is just the last week and a half, we've seen some lower highs in the S&P 500, and then we have more repeated tests of this support in here. Now, that doesn't make me bearish at all. We are in a long-term uptrend here, a very powerful uptrend. So I'm not looking to pick a top in this market. But when I see signs that we're starting to consolidate and we have a big catalyst coming that might change the supply and demand dynamics, we have to be aware of what's the potential that could interrupt this party, because it is a party. We've just got things rocking all over the place. We'll talk about where the weakness is as well, because there's weak spots. But when we talk about the S&P 500, we're just days off of an all-time high here. So the good news is that this rally this morning has taken us a couple points higher from this band of support that we've seen recently. This, what I always look at in terms of supply and demand is, what we see is the more times that support is tested, the more likely it is to fail. The more often it is tested, in other words, the time between them kind of, is that compresses, it gives us a greater likelihood that the support will fail. Likelihood, not guarantee, because nothing's guaranteed in this market. So what we also see is demand is getting more aggressive because we have lower highs. Now, again, we're only a couple days off of all-time highs, so it's not a bearish thing at all. It's a cautious thing saying, we're back above that orange 5-day moving average. If the Fed comes out and whatever, the market doesn't like it for whatever reason, maybe it does something like this, blasts down and then starts to do something like this. Well, then when we get trapped underneath this support, well, then that's possible we see further downside. Very similar to what we saw with the biotechs as they gave way from their support at 97.50 a couple weeks ago. When that support was given way and we saw more repeated tests and lower highs, when that support was given way and we were below the declining 5-day moving average, it led to a steeper decline. So that's a possibility. It's not meant as a prediction, it's just a possibility. For now, what it means is just be aware of where your stops are and what you're comfortable with accepting in terms of risk if we do sell off. Otherwise, the market overall, based on the daily and the weekly time frame, is innocent until proven guilty. We're enjoying a beautiful bull market. To be bearish is foolish up in here until we have actual evidence that maybe the market trends are diminishing. So that this is the weekly time frame, and we've been in this huge uptrend for a couple years now. Nothing has interrupted it for more than a very short period of time so far. I'm looking at the thing. I see that I'm not there. Let's see. I think that centers me better. Anyways, the S&P 500. Let's talk about the NASDAQ because that is 2 days off of its all-time high. This light blue line is the week-to-date volume-weighted average price. This is off of Friday's gap up, and this is the rising 5-day moving average. So this market is making a very clear pattern still of higher highs and higher lows. If we break below this little low right in here, well, maybe we get a couple days of, maybe we get a little bit of weakness in here and we see a pullback down to the month-to-date anchor. But I wouldn't get bearish unless we were to get trapped below the 5-day moving average. So, that's thinking a couple steps ahead at this point, and at this point that's too far ahead, because what we have to look at now is, I think this is the key level for the near term, about 530. Let's take a look together. It's about 533.5. If we get below and hold below 533.5 for more than a half hour or so, then I think you've got the possibility that maybe we see a little bit more weakness. But again, that would constitute a pullback in a major uptrend. Even if we did something like this, that would be still, I think, a higher low when you look at the daily time frame. So again, I'm not concerned about the S&P. I'm not concerned about the NASDAQ. The Russell 2000 continues to be a mess. This market is in a zone where it's supposed to find buyers. It's supposed to find some support. We've got the anchor off of the low from October that we're touching right now. That's this anchor I just placed. And that was exactly 50 days ago right here. That's what that vertical line is. That's where we're 50 days ago. This red line is 20 days ago. So we're coming down into the 50-day moving average and the anchor off of this low right here where we last tested the 50-day. So this is where we're supposed to find support. But the pattern on the shorter term time frame is very clear. Since this high, we've seen a very clear pattern here, and that pattern is lower highs and lower lows. So me as a trend trader, I don't want to buy this. Just because we're in an uptrend on the daily time frame doesn't mean I want to buy the dip. You hear me say it all the time. Don't buy the dip. Buy strength after the dip. If you've been paying attention to my work, what I said here last week, what I say in all my videos that I show publicly and for subscribers, we would need to see something along the lines of this to make me think we could get a sustainable rally. And that is, we want to see the market have a higher high and higher low above a flat to rising 5-day moving average. We're not near that yet. Perhaps in a couple days we can see that happen. And then we would start to say, okay, well, where is it likely if we were to rally in that type of condition and to be a buyer here with a stop under there, let's say, where would it have the potential to go before it's likely to encounter a source of supply that might become resistance? So notice how I say that. Where would we have the potential to find supply that's strong enough to become resistance? Not where is resistance, because we only know resistance after the fact. So potential is what we're looking for. So this black line is the anchored volume weighted average price from this gap, which of course was the election. This anchor, the blue one, is the month to date anchor. Well, how would this look in a couple days? Maybe it would look like this, where those two come together. So maybe if we saw a rally, it would do this, rally up towards this level, make a higher high here, and then pull back, digest a little bit, maybe shake out, and then perhaps the Russell 2000 can do what everyone thinks it's going to do and has been telling me that it will do. And when people will tell me on Twitter, hey, it's going to do this, I ignore those people because nobody knows what's going to happen. People have been telling me the energy names are going to bounce, all the way down here. And if you follow my work again, I was looking at this as a potential level of support. This prior resistance here had the potential to become support. That was also where we saw that rising 20-day moving average. Well, that was at what, 94.5. At 94.5, that was right here. We got a little bounce there, but that was a bounce for a day, and it bounced right up to the declining 5-day moving average. What I'm looking for is trend alignment. If it's got a declining 5-day moving average, well, to me, it's guilty till proven innocent. I don't care if it's at the 20-day moving average or if it's at the 50-day moving average at 91 and change right here. And people buy that right there and they say, hey, it acted as support. I only call it support after it's proven itself and it's back above a flat to rising 5-day moving average. So the people who have been buying here are buying a clear downtrend in the energy names. It's a very, super clear pattern. Lower highs and lower lows below that declining 5-day moving average. And we've gone through the 50-day moving average. We've gone through the 200-day moving average. We've gone through the year-to-date anchored VWAP, and there just aren't buyers. And people are getting excited and saying, hey, it's making a bottom. It's not really. I mean, look at it. It's flat for 2 days. If that gets you excited about upside, then you look at markets differently than me, and that's fine. I'm not right all the time. But what I would be looking for is I wouldn't get excited about a rally up to 88. I'd think maybe it does this, and then same thing. Then maybe we can see some structure to the movement. And that's what having a strategy is all about, is understanding market structure on multiple time frames and looking at it and saying, where are the odds best that I can make money? Not taking a stab at the 20-day moving average, the 50-day moving average, the 200-day moving average, because they often act as support. Because the times they don't act as support, you're going to get the shit kicked out of you. And of course, that's not what we're involved in this for. Semiconductors are behaving well. They're in the middle of this recent range. They're back above the anchor from the election. I saw a number of people interested in TSM. We'll talk about that. I also see people talking about AMD. AMD is, it's a dog. It's in a downtrend. If you're going to buy a semiconductor in an uptrend. Now, let's take an objective look at AMD. We're coming down to right now the anchor from the October 2022 low. And that maybe is going to be a near-term low for this stock. If so, then, we're maybe going to begin a bounce. But to me, I think it's a bounce. And if it continues to bounce, then perhaps it bounces up to where? Where is it likely to encounter a source of supply that might become resistance? Well, perhaps it could rally up to the 20-day moving average, which is also the location of the anchor from the election. So perhaps it does that, makes a higher low, rallies up, bumps into the 50-day moving average, and then it's just going to take some time for a real uptrend to emerge. It might do something similar to the way it did over here, but the difference is we had a rising 200-day moving average. The long-term trend was up. Now we have a declining 200-day moving average. I've been making fun of Occidental Petroleum for a while because it's in a downtrend. And why do people buy this thing? This is where I think Oxy is likely to go. It's in a downtrend. And I'm not making fun of people who buy it. I'm just saying, listen, buy stocks in uptrends. There are so many stocks in uptrends. This market is at all-time highs. You've got stocks like Apple, Amazon. I mean, this is where the money is flowing. Why do you want to buy the shit companies, the shit stocks, where the money's flowing out of them? Go where the winners are. Anyway, so I said I was going to talk about Tesla. So Tesla, obviously, another new all-time high. The name of the game in Tesla right now is to ride your winner. You have to decide what's right for you. We've got a rising 20-day moving average. Maybe you set your stop below that rising 20-day moving average. If you do, that means you're willing to ride it down close to 100 points on your stop. To me, that's a little too lenient. It's a lot too lenient, actually. Maybe instead you're looking and saying, hey, it's making a beautiful pattern of higher highs and higher lows above the rising 5-day moving average. So I will set my stop underneath the most recent higher low with that rising 5-day moving average. So maybe that's right here. Or maybe you're going to set your stop under one of these higher lows. As far as new purchases in here, I don't think you can purchase stock and it here for an investment. You have to ask yourself, where has it come from? It's just far exceeded what was the measured move of this inverted head and shoulders pattern. That was the height of that. It's far exceeded it. It's at all-time highs. So if you're going to be trading it in here, I think now it's a day trader's game. How was the way to trade it today if you were a day trader? Well, it gapped down. It got back above the daily VWAP. Maybe buy it there with a stop below here. That's one way to get involved. There's all kinds of ways. But the name of the game in Tesla is protect what you have. Don't let this stock, it could easily come back down to that 20-day moving average. And I would be more interested in buying it for a swing trade as it bounces from there than certainly buying it up here. It's stretched, it's due for a rug pull, it's due for some quick profit taking that might end up being pretty painful for those people who are late to the party. NVIDIA, I'd mentioned yesterday that it's due for a bounce. It came down to the anchor off of this low and from this low actually, from the September low. And we're getting a good bounce in here now. I day traded it yesterday. I didn't buy it as a hold, and I have no regrets. I was very clear about that. And now it's rallying here. So the best thing for NVIDIA is, it probably will run a little bit further, maybe up into the conjunction of the 20 and the 50-day moving average. And then you're going to see that anchor from the election bearing down on it. So I think you've got room to about 140 or so in here. And then hopefully it would pull back and make a higher low in here and then be able to reemerge as a market leader. If instead it got stuck below that 20 and 50-day moving average and then didn't hold that, then perhaps it's another move lower. Longer term, of course, it's in a beautiful longer term uptrend. And, I think that buying Tesla today is similar to buying NVIDIA right here. That is, after a huge percentage move, you're going to see some volatility. It doesn't mean a top. It doesn't mean the top. It means a top for a little while. That's all it means until proven otherwise. These things are in major, major uptrends, and it's going to take a while to reverse them. So Tesla, the name of the game again is protect your profits. What else did I say I was going to talk about? AVGO. 3 days ago, everyone hated NVIDIA and said that AVGO is the new NVIDIA. Forget about NVIDIA, sell that. And it's just crazy how the focus shifts so quickly. Anyways, we've got AVGO, Broadcom, in a major, major uptrend. Look at this monthly time frame. That is just incredible. That is a hell of a move. These moves over the last 15 years down from a adjusted split of $1.50 to 230. When we look at the daily time frame, of course, this was the earnings gap. And we've got, of course, as always, we have an anchor set to that gap right there. And what we want to do is say, okay, if there's truly buyers who say, this was a major shift for this company and we don't want to chase it, but as it pulls back to the anchor from that gap, that is a key anchor point that we want to be aware of and say, here's the potential for support. So when we look at it on a shorter term time frame, such as a 15-minute time frame, we have that blue month-to-date anchor, the rising 5-day moving average, and now we're going to put the anchor there. So it's not meant to be precise always. Some people use offset bands. I don't really like to use an offset band. Instead, I look at it and I study the action in there and say, what this anchor from the earnings report tells me is that the buyers have been in control. It bounced from there this morning. Now we've got a little bit of a knife fight here. So what's happening under the surface? If you look at these 15-minute bars, since we've touched that, we've had a lower high on each one of these 15-minute bars so far. So maybe getting back above here, it can do this, and then we could set a stop below there and initially enter it as a day trade with the idea that, hey, let's maybe take some of it off if it gets up to the daily VWAP. That would be a nice little trade, so let's say from 233 up to 237. That would be a nice little day trade. And if it holds up in there, if it blasts through there and then the daily VWAP becomes support, well, then we look at it and say, okay, well, how's that in relation to what is now the 4-day volume weighted average price? Maybe that's where it's going to find some little supply. So we monitor that. And if it behaves well in there, well, then we continue to hold it and we raise our stops up and listen to the message of the market. It's not about price targets and saying, here's how high it can go, here's how high it will go, but instead to look at it and say, here's what the possibilities are. And most important, if you're to take an entry in here, where does your stop go? Well, if this ends up proving to be the short-term low and we start to rally from there, well, then your stop, I think, goes below there. If you're looking for an investment, maybe your stop is way down here. I still think you can, look at it. I always look at them this way: is if I want to get involved in a swing trade, well, I have to start my trade with a day trade entry. And if that day trade entry works and the market allows me to hold it, well, then I'm going to hold it. But it's not up to me to decide, hey, I like this stock, I'm going to buy it, I'm going to hold it. It's up to me to say, I'm going to buy this stock, I know where my stop is, and if the market doesn't allow me to hold it for the day trade, well, then I've got no business holding it for a swing trade. I've got no business holding it for a longer term trade. I want the market to prove to me, and that's what having a strategy is all about, not buying stocks in downtrends. I saw somebody ask me about CELH. Why would you want to buy CELH? This is like one of the worst stocks out there right now. It's just been hammered, and there's no such thing as down too much when the stock is in a downtrend. There are still sellers in here. Leave stocks like this alone. Of course, you're going to be able to get bounces along the way, and then someone's going to say, hey, Brian, I bought it at 28 and sold it at 32, and that's great. But wouldn't you rather have a strategy where you can control risk and have that strategy repeated over and over again? That's all I do. That's my approach to the market. So let's do this. Let's take a look at some of these tweets. I'm going to look at Twitter and look at some of the stocks that people wanted to be me to look at. And let's see. Well, there's a bunch of them. So looks like there's 97 comments. Let me go down the line. Let's see. I did see 2 people ask me about Dash, and Blades of Steel is an ex-subscriber, so I'm going to give priority to people who pay me $10 a month on Twitter. By the way, if you're not familiar with that, let me do a little bit of marketing while I got you here. $10 a month. Every day I provide 2 videos. I give some stock ideas. We've got a live webinar for subscribers tonight. That's a monthly educational thing. Anyways, let's take a look at Dash. To me, Dash, it's breaking down. You don't want to be a buyer of Dash. It has the potential to pull back to the 50-day moving average and maybe find some buyers, but we just made a lower low below a declining 5-day moving average. It's had this huge run from 100 to 180, so it's had a 80% rally in the last 3-4 months here. So it's certainly due for a little bit of a pullback, at least to the 50-day moving average. So that's a level of interest. It's not a level to buy the stock, but it's a level to say, okay, let's see how it behaves down in here. And if it just continues through it, no problem. What we would do is we'd say, let's look at other levels. Maybe it would come down to the anchor from that gap, which most likely I would think was earnings. If that fails, the next level of interest might be from this low down in here. So for me, I think that one, the primary trend is higher. I know that because I have a rising 50 and 200-day moving average. So I don't want to short this stock, but I also don't want to buy it because it's breaking down, and I'll let other people lose their money trying to find the bottom in a stock. Um, A-Lab, Ray wants me to look at. A-Lab is, similar to Tesla in that the name of the game here is protect what you have. And it's a beautiful uptrend. It's just stair-stepping higher. Higher, these little consolidations get resolved to the upside each one of these times so far. And on that 30-minute time frame, you can see we have a rising 5-day moving average that's being defended here over and over again. If we can get back above and hold above in here, then it's likely to make another push. So for new money, maybe it does something like this. You start your stop right here. And if it does something like this, well, then you raise your stop quickly up to about a break even or so. And until it starts to do something like this, and maybe you make a couple points, or maybe it just keeps going to 150, 200, whatever. But from a longer term perspective, I think you want to use maybe a 10-day or 5-day moving average and say, raise your stops up underneath those higher lows. It's innocent until proven guilty. Riley wants me to take a look at AS. And here's the thing about a lot of these stocks that people are asking me about. They're already quite stretched. AS, it's certainly not a new uptrend. Riley, this isn't, from trends without friends, because maybe people aren't following it, but you're not the first to find out. It's gone from $10 to, it's gone up 180% here in the last 6 months. So, this is the type of market that creates complacency, and people think that these types of stocks are going to continue to do this over and over again. Name of the game is same as Tesla. Raise your stops up under the levels that make sense to you. Whatever you do, don't set your stop in the first 30 minutes of the day because they're going to steal it from you. That's pretty obvious. Understand the personality of the stock. Every single day, they try to shake people out of this stock one way or another with these big moves. So, it's higher highs and higher lows. If it broke below this, I would take a little bit off and think that maybe it's going to start to digest a little bit. Let's see how much I spoke about AMD. Rose wants me, who's a subscriber, wants me to talk about Deere. And Deere, let's take a look at the weekly time frame. The reason I want to look at a weekly time frame is because I can't see anything to the left on the daily time frame. So here on the weekly time frame, beautiful. I mean, this stock has done nothing since 2001, basically. I mean, it's just been chopping around in this range, and it's a pretty wide range. But right now, when the stock trends, it can trend well. So we had this big trend over here, followed by 3 years of doing nothing. Now we saw a breakout past that range, and this band of resistance here is being tested. Resistance broken tends to act as support. We saw a large volume break, which is what we always want to see, and we're seeing lighter volume on the consolidation. So the volume pattern is good. We are still in a pullback mode. We've got a rising 20, 50, and 200-day moving average, and the 5-day moving average is declining. At the end of the day today, we'll be getting rid of this data. So tomorrow morning, we get rid of, the first hour and a half, we get rid of these 3 bars, meaning that tomorrow morning, even if the stock is down in here, that 5-day moving average is going to start to flatten out. What I'd like to see is maybe something like this, be a buyer right here with a stop under there on half of it maybe, and a stop under on the other half under here. It looks like Deere could be gearing up for a major run here because it's got 3 years of pent up energy where it's done nothing. How about Bill, B-I-L-L? Bill is at an important level. This is the anchor from this gap up, which of course is from the election. We've been seeing it trying to be defended here the last couple days. It opened on a gap today, got people excited, but with a declining 5-day moving average, don't chase those gaps. And it's settling down in here. And maybe if it can, maybe even a little shakeout below that, and then something like this, I think that Bill is a good one to keep an eye on. I mentioned I would talk about Snow. Snow is kind of similar. This is what I'm looking for in Snow. They had earnings over here. Let's take a look at the anchor from that gap. And you can see that we're, kind of, fighting it a little bit. So let me just redraw this. And what might happen with Snow is that, we're stuck below the anchor from the earnings. So maybe the stock does a little bit of this here in the next day or two. And then that 5-day moving average starts to flatten out. It works through that supply and then gets going from there. So Bill is a good one to keep an eye on. I see people asking about coin and Mister, and these are commodity stocks. I mean, Mister in particular. You've got all these miners. I think somebody else asked about CIFR. These are mining stocks or owners of Bitcoin. The bottom line is, I view Bitcoin the way I view oil, the way I view gold, is that they're commodities. The commodity, whether you agree or not, isn't irrelevant, but the is irrelevant to me at least. That you would expect the mining stocks to be all ripping higher because Bitcoin, is just coming off its all-time high just today of 108. But instead, these things are not behaving in conjunction. So IBIT, this is Bitcoin basically, the ETF. MSTR is a large holder of that. Why is this stock still down 25% from its highs when Bitcoin is down 5% from its highs? And it's acting like crap. You can't trade you have to, so in other words, each stock based on its own merits. If you're going to trade gold based on what gold does. If you're going to trade gold miners, trade the miners on the miners by themselves. Someone's telling me about seasonality in Russell 2000. I spoke about Russell at the beginning. I think, I've said this over and over again. Just as I say, the 50-day moving average and the anchor off this low are a level of interest. It tells us we want to pay more attention because we're at this level that might be a big battleground because the buyers are often at the 50-day moving average. Seasonality is a time of interest. It's not a reason to buy, just as a touch of the 50-day moving average isn't a reason to buy. It's a level of interest, and seasonality is a time of interest. So far, there is zero evidence that this season is being strong to the Russell 2000. So I saw a couple TSM, and that's a good one because TSM really looks strong. TSM is Taiwan Semi Manufacturing. So let's look at the weekly chart on TSM. And here you can see, we're in a beautiful uptrend. We've been, we just pulled back to the 10-week, 50-day moving average. We're getting a bounce. We've got this nice tight consolidation in here. And you might even look at this and say, hey, that's a shoulder, that's a head, and that's a shoulder. Inverted head and shoulders continuation pattern. And that's fine if you want to categorize it like that. You have to remember what head and shoulders patterns are. They're just a shift in, we had this high, we had this high, so we had a lower high, we had this low, and a lower low. So we had a pattern of lower highs and lower lows. Then we had this high, and we had this low. That's a higher high, this is a higher low, and would be a higher high here. So that would create, change. So in other words, an inverted head and shoulders pattern is just a reversal of the upside. It's changing the direction of lower highs and lower lows to higher highs and higher lows. So it certainly looks like it's getting ready. Here's the 30-minute time frame. You can see that range is tightening up in here. So we've got a little bit of resistance here. I'd love to see it, make a higher low right here and then blast through there, and then maybe have a tight stop here and half of your stop below here, so that if it breaks out and then fails, take a little bit of a loss. But if it recovers and does this, you've still got half of your position. But Taiwan Semi definitely looks a hell of a lot better than AMD. I would much rather own that stock in the uptrend than the stock in a downtrend. We're running out of time here. I said I was going to talk about a couple of the drone stocks. ACHR is behaving really well, and I think that Joby is one you've got to keep a close eye on here as well. It's beyond daily R2 today, and that doesn't mean it can't continue to move higher. But this one has had a longer term, a lot of back and forth. It just got back above the anchor from this peak right here, and my issue with it was as a SPAC, and a lot of SPACs can make it past 10, but I think this is probably headed quickly for a move up towards $10 per share. And your stop, you've got to manage it on a shorter term time frame. I don't think you can buy it here with a stop below the low of the day. That's close to 10%. Maybe put your stop under these higher lows. So that, let's see, can I do biotech? I did do biotech. I spoke about NVIDIA. We're running out of time here. And again, I want to remind you, I'm going to do this every Wednesday, not next week because that's Christmas. But I'm going to do it every Wednesday, see how this goes. Tell me what you think about the format, how I can provide value. And I'll also remind you before we go, as soon as the Federal Reserve makes an announcement, your job is generally to watch. The way I would watch is I will say, let's say this was the Federal Reserve announcement right here, just for, we're looking at a 2-minute time frame. I will put an anchor on that first bar and see how it digests that information, how it accepts or rejects price action based on that Fed. And that Federal Reserve announcement anchor will be relevant rather, for up to a week or two generally. I wrote about that in my Anchored VWAP book. So again, I have a subscription on Twitter that's just $10 a month. If you want to check that out, I encourage you to do so. We do have a live webinar for subscribers tonight where the focus is education and answering subscriber questions. So thanks for tuning in. Be sure to subscribe to Stocktwits, the YouTube channel, as well as follow them here on Twitter. And I'll see you again next week. So thanks for tuning in.